As Claire said, I'm Niku Asghari, the FT's digital markets correspondent, and I'm joined by David Mercer, Chief Executive of LMAX. And we're here to talk about cross-asset markets, from stablecoins, from FX to stablecoins to tokenized assets, all the things that we've talked about a lot of yesterday, some of which were touched upon on the panel this morning. David, I think to talk about this, we have to start with talking about market structure, right? What is right and what is wrong in the crypto evolution market structure at the moment?
Wow. I hope you settle in, guys. This could be a 3-hour answer. Now, look, what is right with it is the evolution of technology, which always grows capital markets. I mean, you saw it from Big Bang onwards, electronification of foreign exchange to blockchain trading now. So what we have within the digital asset space is we have the technology and we have the trading venues. What we don't have is something that's well developed in traditional capital markets. We don't have separation of function and segregation of funds. So within TradFi, you're a broker-dealer, and or you're a bank, or you're a venue, or you're a custodian, or you're a clearer. Now, in crypto today, you're everything. Doesn't work. It doesn't breed. The last panel talked about trust. You have to have some trust. Okay, the crypto bros out there are saying, David, this is anonymous, this is trustless. But if you really want institutional adoption, you're going to need to follow some of the guide rails that we have well established in TradFi. You know, a lot of the crypto exchanges will call themselves just that. Sorry, I said the word, exchanges. But actually, they act as broker-dealer. In TradFi, are you comfortable with your exchange being your broker-dealer? Are you comfortable with them handling your funds in a non-segregated way? I don't think so. So the world over, if you really want this wall of institutional money to access digital assets, we're going to need to provide that segregation of funds and separation of function, right? And that's everything that's Clarity Act is talking about in the United States, everything we're talking about with MiCA, everything we're talking about in the United Kingdom. And it's, you know, put simply, if there's any pushback from crypto on this sort of TradFi market structure, you have to say, well, look, do you want to stay as a $2.5 trillion asset class? It's actually not very big, guys, okay? It's a tenth of gold.
I brought this up yesterday, but, and I'll bring it up again because it was a salient point. John O'Neill from HSBC on my morning panel yesterday said, for all the talk of stablecoins, the broad market cap is around 300 billion now, and it was the same roughly last year. Correct. So the growth isn't really there, right? Correct. Institutionally, at least.
Correct.
Yeah.
Because, and what's stopping it? It's state and church. If you go to the, you know, and I'm sure we'll get there, if you look at the biggest institutional traders today, mostly the state exists in a well-regulated jurisdiction like the United States, you know, particularly New York or Illinois, or somewhere in Europe like Amsterdam, London, Frankfurt. But the church, the crypto church, is offshore, right? So they can't merge the two. So great words we love to use in TradFi: fungibility, interoperability. Not today. But if you want that 300 billion to become 3 trillion, to become 30 trillion, by the way, I believe it will, right? So I believe there will be fungibility between TradFi and DeFi or digital assets. But you need to give traders, investors, market practitioners the ability to move seamlessly between all asset classes.